Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. Stocks in Europe and Asia look set today for their worst monthly losses in at least 3 years, with investors still concerned about growth in China and the prospect of higher U.S. interest rates. Falling shares prices helped put pressure on the dollar through weekend comments from U.S. Federal Reserve policymaker, leaving the door open to a rise in interest rates as soon as next month. Oil prices fell again, both on federal rates outlook and as investors took profits on last week's 10% rise. Just last week, after a sharp fall in Chinese shares sent global stocks tumbling, a rise in U.S. rates for the first time since 2009 next month had seemed off the table. However, a senior federal official said in a speech at the annual Jackson Hole Symposium that U.S. inflation was likely to rebound, allowing rates to rise gradually. The pan-European FTSE 300 stocks index fell 0.5% with opening today and was on track for its worst monthly performance since August 2011. Germany's DAX was down 1.4%, but markets in Britain is closed today for a holiday. Chinese shares had another volatile session. The CSI 300 index ended up 0.7% after falling 4% at one point. The index was still down 11.8% for August. And the Shanghai Composite lost 0.8% on the day today and 12.5% for this month. Brent crude fell as investors took profits after oil saw its biggest two-day rally for 6 years last week. Brent was last down 1.3 US dollars a barrel at 48.7, and it kept going lower despite last week's gains, heading for its fourth consecutive monthly decline. Gold struggled over the federal outlook, last trading around 1,128 an ounce and quiet trade with London on holiday. This week is busy. We will watch these events all in London time. Tuesday, 1st of September at 5:30, Australian RBA interest rate. 9:30 a.m. same day, UK manufacturing PMI. 1:30 Canada GDP monthly release. 3 p.m. US ISM manufacturing PMI. Wednesday, we will watch at 2:30 Australian quarterly GDP, and at 1:15 p.m. US ADP non-farm payroll employment. Thursday, 2:30 a.m. Australia retail sales. 9:30 UK services PMI. 12:45 p.m. ECB interest rate. 1:30 p.m. ECB rate press conference. 3 p.m. US ISM non-manufacturing PMI. And on Friday, 1:30 p.m. Canada employment change, and 1:30 the same time US non-farm payroll. I will talk in more details about some of this news. Australian RBA interest rate decision will be released on September 1st at 5:30 a.m. This decision is expected to remain unchanged, with RBA now taking a neutral stance. Any change to that sentiment will surely change Australian dollar's short-term trend. Therefore, we will follow the plan if there is a surprise or deviation number with this release. The forecast for the Australian interest rate decision at 2%, previously the same 2%. Our trade plan will be, if RBA decides to cut interest rate by 25 basis points, we will sell Australian dollar. If RBA decides to keep high rates back to 2.25%, we will buy Australian dollar, as market is expecting an unchanged verdict this day. Ultimately, we are a bit bearish on the Australian dollar, as RBA has opened the door for rate cuts, and considering recent drop in crude prices, RBA definitely have room for rate cuts. So if our surprise factor hits, the market will move with volatility up to 70 or more pips within the next 2 hours after the release. And we can see in the chart the bearish trend of the Australian dollar. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment downwards. So 1.75%, we will sell Australian dollar. We will buy it at 2.25%. If no change, we will follow the downtrend. UK manufacturing PMI will be released on September 1st at 9:30 a.m. London time. UK manufacturing PMI is usually a high impact news and very tradable release out of the UK. And considering recent consolidation and risk sentiment, if we were to get a strong surprise, we should see plenty of momentum behind sterling. Manufacturing PMI forecast at 51.9, previously the same 51.9. The plan to trade this release is we are looking for a tradable deviation or the difference between the forecast figure and the actual release figure of 2. Since this is a leading indicator and its impact may hint the future trend of other economic indicators such as inventory, employment, retail sales, the market usually reacts to this release with volatility if we get our deviation number. We will be looking to buy the pound if we get 53.9 or better, or looking to sell the pound if we get 49.9 or worse. We will use the retracement trading method to trade this release. We will wait for the deviation. Then we will wait for the market to move with momentum first and wait for a decent retracement before entering the market and buying the option or placing your trade. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment downwards. So we'll wait first the deviation. If we don't get our deviation number, we will follow the pre-news trend. And at the end of the session, I will show you the trend based on some famous technical indicators. US ISM manufacturing PMI will be released on 1st of September at 3 p.m. London time. US ISM manufacturing PMI is a leading indicator and the first major release for the month, and as usual, a leading indicator for the non-farm payroll report on Friday. We will follow the trade plan for any surprise reading. What analysts expect? They expect US ISM manufacturing PMI at 52.6. Previously it was 52.7. So then how to trade this news? We will be looking for around 2 points of deviation for this trade. If a 50.6 or worse number is released, we will see some US dollar weakness. Therefore, sell the dollar. If the opposite is true or 54.6 figure is released, expect to see stronger dollar in the short term. Therefore, we will buy the US dollar. So we'll buy at 54.6 and we will sell at 50.6 release. If our tradable release are reached, there is a good expectation of 50 pips of market movement within the next 60 minutes on the dollar, where we can place our trades in the direction of the release. I will be trading this release also using the retracement trading method. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, as we will see later. Australian GDP quarterly release will be released on September 2nd at 2:30 a.m. London time. The Australian GDP, or Gross Domestic Product, quarter release is a quarter release that is more likely to surprise the market than a monthly release. But with recent turmoil in the market, I would not be looking to hold long trades for the Australian dollar overnight. The forecast number for Australian dollar GDP quarter release is 0.4%, previously 0.9%. We will be looking for a deviation of 0.3% to trade this release. If we get 0.7 or better, then we'll buy the Australian dollar. However, if we get 0.1% or worse, we will probably see Australian dollar start to move downwards, and we should sell Australian dollar. And with this deviation, 0.3, we will follow the deviation and make our trades. We will be looking for an after news retracement trade also for this news. So we'll look for deviation 0.3 and follow the release. But we will not hold buy or up trade or option because of the sentiment of the currency is downwards. And we can see a 1 minute chart for June release during and after the news release. Australian retail sales will be released on September 3rd at 2:30 a.m. London time. This news is usually a pretty strong tradable release, but as stated with the previous release out of Australia, I would not be looking to hold long, not to hold long an Australian dollar for long term at least, as recent action out of China and the drop in commodities have pretty much capped any potential gains in the currency. Remember, Australian retail sales forecast at 0.4%, previously 0.7%. The deviation that we are looking for the Australian retail sales monthly release is for a minimum of 0.5%. Our tradable deviation is 0.5%. If we get a 0.9% or better, we will look to buy, and if we get a minus 0.1% or worse, we would look to sell the Australian dollar. There is a high probability of market movement of over 50 pips in the next 2 hours if we get our deviation 0.9% or more, or minus 0.1 or less to buy or to sell. We will be looking for an after news retracement trade as usual, and we will do the 3 waits. We will wait for the deviation of 0.5% and then wait for the market to move with momentum first and wait for a decent retracement before entering the market. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, and it will keep going downwards. UK services PMI will be released on September 3rd at 9:30 a.m. London time. UK Services Purchasing Manager Index could be another mover for sterling this week. with Bank of England still remaining hawkish, at least in comparison to other central banks in the region. A strong fundamental should add to its momentum. The forecasted number for this release at 57.6, previously 57.4. If we get at least 60.1 or better, we could see some demand in the pound, and we will consider buying the pound against weaker currencies. And if we get 55.1 or lower, pound could weaken, and we should look to sell the pound against stronger currencies. So we'll look for the variation of 2.5 above or below the forecasted number. Remember, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, and we can see at this chart of the pound yen, it is downwards. ECB interest rate will be released on September 3rd at 12:45 p.m. London time. ECB interest rate is done in two parts. First, with the rate decision at 12:45 p.m., then followed with a press conference at 1:30 p.m. The most important part of the rate decision is the press conference, which is going to be the main focus as the on-site media members could blindside Draghi, and market will react sharply to his response. With market focusing on potential increase in the monthly quantitative easing program and the outcome for Greek third bailout, we should have plenty of reasons to see euro volatility. ECB interest rate decision forecast at 0.05%, the same as previous release. How to trade this release? Since it's extremely unlikely to get a surprise from the ECB, there is usually no volatility following this release, the release of the interest rate decision. However, in the unlikely event that ECB surprises the market by cutting rates, then expect the market to go into a selling frenzy, of course, if ECB decides to keep rates unchanged to as expected at 0.05%, then we should see relatively no change in the market as this lack of move is expected. And you will then wait to watch the press conference. Remember, if we don't get the deviation number for sure, we will expect the market to follow the pre-release market condition and sentiment. Like last release, as you can see in this chart of euro dollar last month, the interest rate did not change and the market just kept going downwards. It followed the trend of the pre-news. U.S. non-farm payroll employment will be released on September 4th at 1:30 p.m. London time. U.S. non-farm payroll is expected to be around 220,000, and with the Federal being vague on the timing of the next rate hike, Market could change its expectation after this release if there is a strong deviation. Non-farm employment forecast at 220,000, previously 215,000. And unemployment rate forecast at 5.2%, previously 5.3%. Our trade plan. Non-farm payroll employment exchange release is forecast at 220,000. And the unemployment rate is expected to be at 5.2%. If we get a significantly lower release on the non-farm payroll, around 150,000 or worse, and slightly higher unemployment rate, 5.2% or more, I would be looking to sell the dollar against stronger currencies as speculation for federals to potentially delay the timing for the first rate hike. So we will make it if we get a lower release on the non-farm, 150,000 or worse, and slightly higher unemployment rate, 5.2% or more. So then we will sell the dollar. On the other hand, if we get a strong non-farm payroll release, 290,000 or better, and the unemployment rate falls or remain at 5.3%, dollar could strengthen and I would buy dollar against other weaker currencies. If we get a conflicting release, then we will wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry if we just wait for 5 minutes just to watch the market and the sentiment of the market and the direction of the market, because you will get a much clearer view. Last thing, remember to wait for a possible revision of the previous release number, because market usually overreacts with the revision. Here you can see the trend that you should follow if the deviation number will not hit after any news release for the major currency pairs. And this summary is based on many popular indicators. You can see euro dollar is neutral in short term and long term. Pound dollar downtrend short and long term. Dollar yen generally neutral. Australian dollar downtrend. Dollar Canadian dollar uptrend. New Zealand dollar downtrend. So we'll use these trends if we don't get our deviation numbers this week. So then I'd like to thank you for attending today's webinar. We will hold following webinar soon. Goodbye and see you next time.